Namaskar, my name is Shishir. Today we all are seeing stock exchanges run by professionals, but there used to be time when stock exchanges were run by stockbrokers and they were also trading. So there was a kind of conflict of interest. Then we saw a change. The stock market, the stock exchange became a demutualized entity. To talk about the entire journey, we have with us a man who was witness and also the instrument behind these changes, Mr. Rajnikant Patel, who served at BSE for 7 years, Bombay Stock Exchange, the oldest stock exchange in Asia. Mr. Patel, welcome to the show.
Thank you.
First of all, when we talk about the demutualization, that means conversion of a mutually interest or agreed interest based entity to a corporatized entity. How was that journey?
Well, BSE being the oldest exchange in the entire of Asia, it was all a mutualized entity. It was started by members, trading members, brokers, and who also managed the exchange. They ran the administration part of it, the board part of it. So this mutual concept of managing and trading actually leads to a conflict of interest because you are a trading member, and this has an option of, I would say, some hanky-panky happening, and that is why we turned the entire structure into a demutualized, separating ownership and management, and convert the entity, which was an association of person, into a limited company. So that is a fundamental change in terms of mindset and in terms of operating procedures. And it was challenging, I would say, being the first exchange in India to introduce this concept and make it happen was quite challenging. I would say simply, it is like getting into somebody's house and saying, now it is mine, and you are no longer an owner. So that was a challenging journey. But of course, I would see, as the history has proven, since we have demutualized and corporatized Bombay Stock Exchange and other exchanges which followed in India, I would say it has really done well in terms of managing and creating a very high level of trust and confidence of retail investors, the foreign entities, and taking the Indian capital market to one step further.
The concept of demutualization came when NSE came into existence as a corporate entity, or rather I would say a demutualized entity.
Right.
So do you think that it was a compulsion on part of BSE to go for demutualization, or there was something else, some other reason?
Well, it was not a compulsion. NSE was a corporatized entity, demutualized. There were no brokers on the board as well. BSE has always been a mutualized entity. The entire journey of demutualization of BSE started with a government mandate. When in 2001 we saw an incident happening which actually raised doubts about the integrity of the trading systems at BSE, and led to an perception that the having brokers manage and administer the exchange as well as being a trading member is an inherently flawed concept of managing a stock exchange. And that's why it was rectified through Demutualization Corporation Act of the Government of India. And we made that into a professionally managed exchange, which you can see is parallel in terms of structure to NSE.
There were so many powerful broker lobbies at that time, and you also said it was a challenging exercise. Can you share some challenges?
Wow. The first incident, I said that it's like getting into somebody's house. The challenge was, you see, basically, there are two things. One is the professionalization of the management, which is okay, which is easier when you get a professional board, you get a professional employees and management, and that's all. The other issue, which is corporatization, that is the more challenging, because you create a value, you put a value into that exchange and made that into a limited company, and where you have to have all the structure of a limited company. And that is where the whole issue comes. The first challenge which I had, BSE's PJ Tower. which is an icon of Indian capital market, and I think I'm told that after Taj Mahal, that is the most printed and photographed entity structure.
Yeah, because whenever we think of stock market, the one building which comes into mind
Is
or,
BSE.
or what is a synonymous with the stock market is the BSE building.
BSE building. So I had a tremendous pressure from the broker owners, members, that you value that building. There is a whole lot of goodwill into it, which is a fact. But I actually purposely did not do it. The question was, when you put a quantum to a goodwill, you define everything else in a boundary. And I know BSE has been the pioneer. It started the Asian capital market, not only Indian capital market. Therefore, I wanted it to discover globally its own platform, its own valuation, its own level, so that we can discover a true valuation of the potential of the BSE's and Indian capital market. It was not only BSE which is being valued, it was the Indian capital market, the entire Indian capital market was being valued. And therefore I said, no, I'm not going to revalue any asset. And we said, we are what we are. And we have figures, we have history, we have the entire backup, and we created the market. So let's go with that and discover our value. And I'm sure it's almost, we discovered nearly $1 billion valuation for the limited company. And that I think is the highest valuation it was at that time. And everybody, broker earlier, who were very apprehensive that we are losing out all this. Our rights and our membership, our trading, everything, and we are losing our asset. They nearly got a valuation of nearly almost like a 7 crore if you include the clearing membership right, the ownership right, the trading membership right, plus the cash valuation, all those things. I think then that biggest challenge was somehow met reasonably well, I would say.
And what was the challenge about the reserve fund? Because if I can remember, when it was being demutualized, there was also an issue on the reserve fund. How did you resolve that?
We said we keep it as it is. We are not going to distribute. We created a capital structure, equity capital structure, and we gave away 10,000 shares of BSE Limited to each member for 1 rupee each. And so that's where the whole thing was absorbed and passed on as an valuation, because BSE share was, that time when we started, it was almost 5,200. So all these issues and concern that my money, our money will not get a valuation, that is where it actually came through.
Okay. And the concept of demutualization, it was gathering significant traction among the emerging as well as the various developing economies during the early 2000s. Can you tell us what is the difference, the key difference between what was going on in emerging and the developing economies or the developed nation and in India in terms of demutualization?
The first thing was the structure itself, conflict of interest and other thing. The second thing was, as a demutual entity, we did not have a clearing corporation. It was a clearing house where the risk of the clearing, the entire settlement risk, actually came onto the exchange. So if there is a big failure in the settlement process, then the whole thing would boomerang into exchange, and the exchange existence can itself be questioned. And therefore the whole separation and isolation of a exchange trading and the settlement through clearing house was not there. So that is why we created limited company, protected the exchange trading and all the listed company and the members' interest, and the clearing settlement, which is basically an incident based, a day-to-day basis. That risk was housed, and we created Indian Clearing Corporation of Limited, which is ICCL foreign, and that is a very important from the perspective of risk. And when we look at the other developed market, they had a view on the risk of Indian capital market. How will I see if I trade as an FII, if I trade, and how will I guarantee and who will be my counterparty, absorbing my counterparty risk, because on the other side, it's just an exchange. So separation is the key. And any demutualized and corporatized entity separates the two structure, and therefore the risk is very well managed and it's very transparently done. So that is the very key challenge, and that's why you see, during my process of demutualization, we came across globally very many exchanges, systems, corporate and regulatory systems, and we knew a lot of options were being offered, and we chose this. I think this is the best, and what I say, the government demutualization exchange corporation was the best way move forward. I think we now present a sample or template for any demutualization in future.
During your 7-year period at BSE, of course, demutualization was one major development. Then in 2004, major crash happened. Then, of course, we saw, immediately after your relieving from BSE, the global crisis happened. So, between 2007 and 2023, how do you see the journey of BSE, how it has progressed, and how do you think that the demutualization helped to grow it much bigger?
I would say, first of all, demutualization and corporation has really helped BSE. In terms of perception, image, management. I think the professional input into the entire operation is really helped, and it has taken BSE at par at global level. The other important aspect for BSE was the technology. BSE has always maintained to be at the forefront of technology, and today BSE is trading, it is world's fastest. So I think that has really helped the image and the trend. One aspect which I say BSE still needs to do a lot in terms of F&O volume. This is what has been the nemesis or Achilles heel for me when I was there, and my predecessors also, and my successors as well. That one area we still somehow not got the kind of volume and the market share which we should have won.
Another thing which you were involved in setting up of the debt unified corporate bond reporting platform. How it has grown up? What were the key challenges at the time when this was set up, and how it has grown up?
You see, in that market, our idea was to bring that sort of a vibrancy into the corporate debt segment, which is even now is not there. The whole transparency and the counterparty and the transparency in terms of yield and everything was what I believe is a parallel to providing equity capital to the market. Because in terms of debt for the listed companies, I think that was a very good thing. But I still believe that yes, it has grown a little bit, but I would say it's still not there. Worldwide, if you see, corporate debt trading is quite good, and that sort of volume will actually help develop our corporate and take away all these rigmaroles and compliances, and centralize the entire compliances and bring transparency into it, which is still not happened. So I would say that if at all we want to get into the universal level, global level, we need to push more. Maybe we need a relook at the entire regulatory landscape to push debt market and bring it up to the level.
But why do you think that the investors have very limited interest in corporate debt? I mean, whether we talk about the retail investors, the option is already there. But the inclination towards equity is much more higher than the debt,
Debt.
Where is the problem? Why they are not getting into debt market?
Okay. As an investor, retail investor, I would say, what do you have when you look at fixed income? You have FD, bank FDs, which are very easy to understand, easy to operate, and which brings with it a perception of a safety and security, because it's being handled by a bank. Now, if you look at just as a psychology of a investor, retail investor, if you need safety, then you say, first thing, what comes to mind is bank. Banking is supposed to be the safety. It is not, in a way, we know that. but it actually gives you that sort of a solace and the comfort level, which is not there in a debt. Because when you look at the corporate debt, it immediately juxtaposes the company, listed company, and it focuses on the listed entity. And that is where the investors' doubt about or concern about entry and exit comes. And couple that with a range bound return, they think that, okay, this is too less for the risk I'm taking. Even though got 3 AAA rated bond or whatever rated bond we look at, that is how the investor feel. The second part, which is, I would say, very universal, human greed. I look at it the trading price and then I see, oh, my 100 has become 150 in no time. So I get attracted. This is common human psychology and it's very visible. Secondly, we don't see that sort of a corporate debt in the newspapers, in the media. We don't see that. It because somewhere down below. So there is the familiarity which is not there. The concept has become little complicated to understand and it focuses on an individual entity rather than a exchange or a capital market. And this is what has kept Indian investors mostly away from this. I hope that is why once we popularize that and bring in that perception change, maybe regulator, government, all exchanges all come together to educate investor that this is an alternative avenue available to you and it is not so risky or immediately risky as the equity.
Are there.
So you can actually look at it as an alternative. It may not be a mainstay, but it can be one of the alternative avenues.
Now coming to the what we call as the financial reporting. That is very critical, especially when the investor wants to know about the company. Because when he's putting money in a company, what he needs return, and he also needs information about the company. And that information should come in a very transparent mechanism and more, what you can say, more articulated manner. How do you think that this entire journey of reporting has grown in India? And why I'm asking this question, because in 2006-2007, BSE won an award from Institute of Chartered Accountant in India in terms of the financial reporting. So how this journey has grown and where do you think that more needs to be done?
Okay, these questions will be in 2 stages.
Yeah.
One is financial reporting for the listed universe to the exchanges and through onwards to the SEBI. Now that is where ease of operation. We have quarterly report, we have all the report, and SEBI's successive guidelines have become more tighter and more structured in terms of reporting. I think that is very important. We at BSE really made the life very easy for the corporate to upload the data and make the financial reporting easy. Now once you just upload it from the corporate side, it goes into exchange and then it goes to SEBI, and the exchange site, BSE and NSE exchanges, both the exchanges give you all the data available there, and it gets immediately, in terms of near real-time uploadation. Now that is, uploading is a very important because people can get the information about the company performance and everything that way. So I think that brings in the confidence. Also that takes away the insider trading kind of an information because it tries to give you a level playing field, and that brings in more confidence into it. And I would say indirectly, it will try to bring in more retail and other participation in that. Now, coming back to BSE per se, we have always been good in terms of annual reporting, everything. But once demutualization happened, we professionalized the entire thing. And we said, okay, we also would be transparently available for any scrutiny. Like we submitted to ICAI and we said, okay, we want to participate into this award thing. Then definitely we are opening up. And we said, okay, this is the one, you come and see whatever. And that's why successively for 2 years we got the award. That is the whole thing has been continued. And I think that brings in that sort of a transparency in terms of reporting. And now that we have a listed, BSE has been listed, all the investors, they get that report, not only in terms of reporting, but individually also they get it. And that has really helped in bringing that sort of confidence and trust. And I believe that going forward, maybe BSE should now again participate and start getting that accolades, because the system is already there and it just is going on very well. I think it just needs to be a little bit pushy in terms of being more open and say, okay, I'm here, I'm participating, you scrutinize, and then recognize if there is a flaw, we can always rectify.
If I ask you about the best practices followed by BSE, can you share one or two best practices which was followed by BSE and which became a kind of benchmark for the industry to adopt that?
Okay, the first was the getting ISO certification for BSE. BSE is the world's second exchange when we got the ISO certificate. And that is very important, I believe, in terms of all reporting because you have structured everything and you have a responsibility center. So, which brings in the discipline in terms of performance that we can pinpoint that this exactly is the unit which is responsible reporting and execution. So that was very good. I still feel that it should be almost all financial intermediaries should also accept that as a universal. That is that another. Other thing which we wanted to do was the Six Sigma, so that we can actually achieve that level of performance and no errors, which was a project which somehow is not yet completed, but I would say that these two best practices will really bring in that sort of efficiency into the entire reporting system, and it should be the industry standard.
When we talk about the equity universe in India, it's very small. The number of people participating in equity market is very small. Do you think that the best practices followed by stock exchanges will have some kind of impact on the investors to come and participate in the equity market? Or how do you think that these practices can motivate these investors to come and take part in this equity market?
Absolutely, yes. If you as an investor look at trading into Indian capital market, you look at what? You look at the exchanges, that how they are working in terms of how much transparent they are, how much efficient they are, and how quickly they can actually give you information and process the data and give you. Now, our going for T+1. Now we are T+1, which is, I think, world best benchmark. I would say that actually gives a lot of confidence and acceptance of equity market as an safe and transparent way of investment, the opportunity. That is what will bring, and we have seen that over a period of time, the retail investors base has been increasing, not to the extent which we would like as a percentage of population. Yes, we are still low, but I think that spread at the bottom of the pyramid is increasing, and I think that is that's a very good sign, and that is where the reflection, it is where the reflection of the best practices adopted by the exchanges happen. And to top it up, if we see SEBI as a regulator coming in and bringing in the best policies which the exchanges will implement further down to the intermediaries, and that will reflect into the efficiency level and transparency level at the client level, I would believe that really brings in that faith and acceptance and increase. But I think still a lot more needs to be done. Financial literacy should become the de facto one of, just as you have a history lesson, it should be taught from the school level, and financial literacy should get a lot of focus, which I think is not there yet. You have MBAs, you have everything, but financial literacy for non-graduates, the people who have just about done their 10th and 12th, but they are entrepreneurs, they may do their own micro businesses. How do they take and grow? Like that's what, when I interact with startups and which I mentor them, this is where it comes, that how do they get that knowledge and that information and that expertise. So I think we need to further focus on that to spread that financial literacy across. It should be like just you understand your sociology, you understand your economy, you should understand your finance as well.
You talked about the settlement and settlement process in stock exchanges. We have seen the settlement for after 2 weeks, then we saw T+5, then we saw T+3, then we are talking about T+1. Do you think that T-settlement is possible? Settlement on the same day?
Yeah. Yes, it is possible. It is possible, but it requires two infrastructural changes. One is, I believe that exchanges should be given a limited banking license. Not going across loans or advances or something, but for the capital market. And just as you have depository on one side, you have a exchange bank on one side, and clearing corporation comes in, and that settles. So maybe we can do a batch process, or we can do even NRT, near real-time processing, because both the exchanges are completely up there in terms of technology and speed. Immediately, a settlement can go on with the depository interoperability and the banking connection. Once you get a payment gateway and the depository interoperability with the exchanges, and we have two major exchanges. So I would say that is possible. Technologically, it's possible. System and process-wise, it's possible. Yes, it will. The further advantage of it will also contain the risk, because concentration risk or those sort of a failure risk we can actually take over from the system, and our system would be, if we can do that with the SEBI and the Ministry of Finance actually giving it a serious thought, that integration will not only look at the Indian capital market, it will actually look the Indian financial system. The entire system can get on there, and it would be the world's first probably.
But the real problem could be that since the trading hours or the banking hours are different in various time zones, so matching these two or bringing these two on the same platform, will it be easy to do so?
Even today, if you see, when the settlement happens, trading opens at 9 or 9:30. Banks are almost there by 10 o'clock. So the settlement, that's why the corporate clearing corporation
what about the people who are settling abroad? What are the people who are abroad, investors abroad? My question is about those investors.
Yeah. See, we can take that on the internet. When we were at BSE, we were trying to do that interoperability with the Singapore Stock Exchange. We have actually resolved that issue of across countries. So that was, it is a little bit of a challenge, but I would say it is not an insurmountable. It is easily done in terms of settlement, and even today also we take some exposure which is overnight, because the trading timings are different. But I would say we can extend. We have tried that in the commodity exchanges.
Okay.
Your commodity exchanges operate right up to late night. And because they have to look at the London and other market. So if we can do it in commodity exchanges, maybe a clearing settlement process, we might have to work out a solution for that. But it is not that it cannot be done or it is not being done.
Okay. What about IndoNext? You have been part of that journey. How this journey has been, considering the fund requirement for small and medium enterprises, and considering the dominance of MSMEs in the overall Indian economy, but they are not getting the opportunity to raise fund, to go for mobilizing fund. How this is going to help them? How has been the journey?
Well, you ask a question which I can write a thesis on. This goes back to when we had regional stock exchanges. And they were there right for the same thing, that they wanted to allow the local entities to come there, which is not having that much of a compliance load, and which do not have the financial wherewithal to come to the list on the national exchanges. And that's why regional stock exchanges had that, and which I would say parallelly in today's parlance, if you say, it was like an MSME. So, or SME exchanges, which we are doing. I'll talk to you about that. This thing, we wanted to continue and take it to the next level by allowing the survival of the regional stock exchanges. BSE took the lead during demutualized processing and launched IndoNext. IndoNext was a platform where a good, compliant regional stock exchange listed companies could trade on the BSE's main board. And therefore, they get a wider audience. They got wider participation, and they can come in. At the same time, we actually laid a separate level of compliances, taking into consideration their levels, and it was right there. Unfortunately, IndoNext could not be successful because every regional stock exchange wanted to capitalize, and they thought we have the goodwill, so we can take a lot of money out of it, capitalize on that, and which is not the way. When you have a nationally connected two national exchanges efficiently running, regional exchanges had no competitive advantage to be there and the financial wherewithal. They could have actually accepted that, and slowly they would have become a national entity themselves. Somehow it didn't work. So it was an experiment which unfortunately.
Any region specific for that?
During demutualization, every regional stock exchanges wanted valuation. Basically, it was in short, it was that every regional stock exchange thought that they can get when BSE's valuation came to that much, everybody thought that we'll get a valuation. But there was no potential. Why would anybody invest into regional stock exchanges when you have a national stock exchange available? Those companies who are SME, they may remain, but then they did not ever had that sort of a volume. So it was not I would say, economical or sustainable arrangement. So that's what it is. And that time we also launched a concept of SME exchange. During that time, of course, it took some time for regulators to come up to that level to launch SME. But the SME was there. So that SME could have actually the entire regional stock listed company, which were also sizable. They could have come onto SME platform, and we would have seen a very vibrant SME platform. And that would have helped the small regional exchange listed companies to somehow grow and come on the main board. So it was a win-win situation, but somehow I would say somehow the valuation game killed it.
So you have been advocate of RegTech. Can you tell us some of the projects integrating technology into the regulatory operation of surveillance, reporting and compliance implemented during your stint at BSE?
Yes, first thing was during my time we launched BSE's surveillance system, which was multi-exchange, multi-segment company. So you could integrate two exchanges feed, and you can look at up to the client level risk management. So that was a very good, and that the feed which we provided to regulator SEBI, and that's why SEBI can actually get assimilate BSE and NSE together feed and have a bird's view in terms of risk management, in terms of manipulation, in some trading. And this is what I would say is a very basis of start of a very good integrated surveillance system, market oversight, and that is very important. The other way is corporate reporting, where standardization and ease of operation for the corporates to list. We have 4,000-5,000 companies, so they find it very easy in terms of that. The other part was that across exchanges, earlier I think I would be not wrong, but BSE and NSE were slightly at loggerheads and it was happening, and it was probably true because DBSE was a mutualized exchange and NSE was a demutualized exchange, and therefore it is bound to happen that you have that sort of initial hiccups. But when we demutualize and we corporatize, the integration and having joint surveillance committee meetings, joint investigations, and then sharing of information, this is what our regulatory technology is helping, because now both the things are so much I would say so effortless and so easy, so that for a regulator monitoring the market and how it happens in the real time and how it investigations and manipulations are happening, I think that is a very good, and that has really created that touchwood, we haven't seen a major scam or incident happening since this 2001. So I would say yes, it's working, and as the time goes, I would say this is the way forward to have a healthy market oversight.
During your 7-year periods at BSE, you had a lot of discussions and deliberations with the regulator, SEBI, on various issues. Can you share one or two anecdotes of the regulatory changes which took place during that period? So some experience, some very good experience, some good thing to share with our viewers.
Okay. Over that years, I mean, I have worked, I had the opportunity to work with SEBI chairmen, Mr. Bajpai, Mr. Damodaran, Mr. Bhave, and when I joined, Mr. Diya Mehta was just, you see, I remember one sentence when me and the NSE MD was there, Mr. Bajpai used to say, compete for business, cooperate for regulation. I mean, that was a start where which NSE, BSE and SEBI actually came to be really easy in terms of cooperation. I think that was another one thing. Second thing was, I would say, this NISM institute. And when Mr. Damodaran was chairman, and then he wanted this NISM, the first thing was he called me and MD NSE, and he said, okay, we are starting. So somebody has to give the first check to NISM so that we can actually have a market education institution which will take care of it. And I went back to the board and said, okay, this is what we need to contribute. And board said, fine, go ahead. And BSE contributed the first check. And that is something which I believe is not only in terms of finance, but in terms of mindset, in terms of working towards developing a healthy and a very, very informative and informed marketplace. I think that is the important change, and that also I relate to professionalization, corporatization, and demutualization. These are the benefit which may not come regularly on the forefront, but this actually works as the underneath foundation to create a professional entity and a professional market segment, and have that sort of a regulator interaction which will go and make the market the best in the world.
So giving check for NSM was much before NSE, was the second after launching the equity derivative a day before the NSE. So it was a corporate rivalry at a different level among the stock exchanges. Yeah. Finally, my question, the last question to you about that, if I talk about the next 3 to 5 years, how do you see the Indian stock markets in next 3 to 5 years?
Okay, I'll start that when I joined, the Sensex was 3,000. Now we are 60,000. And we have had a little ups and downs, but we have never had the major fallouts. Yeah, market has to have that ups and downs. So I believe that going forward, that with the kind of a regulatory push which we have, and making it very easy to comply, I believe use technology to reduce the cost of compliance. And that will actually make the market very strong and robust. Sometimes it should not become that, people do not want to list. I interact with the SMEs and they say, oh my God, I need to do so much because exchange and the regulator SEBI requires so much thing. And that will increase my cost of compliance. And I'm a small guy, so I may not be able to sustain that in terms of sustainability. So we somehow have to have exchanges and SEBI need to sit together to really make that operation easy and less cost effective. Use technology to the maximum and widen the market on the listed universe and deepen the market in terms of retail investment. These two widening and deepening will happen. Then I would say that regulatory tech which we are talking about will really be the instrument. And now that with AI coming in, I remember in BSE 2001, 2002 when I was doing the surveillance, I used business object to have that surveillance system to throw alerts. What's happening? Is there a chance? So we had used business in that time. Now that AI available, exchange using regulatory technology, exchange monitoring and oversight would be actually to that extent easy and more effective. So I am looking forward that our SME segment should be the focus. It should be. Listed universe is already there. We have. It should be focused. The second aspect which we have to look at interaction with the global markets. Of course, there are certain hidden hindrances, but we should try to work that out so that, India actually takes advantage and reaps the benefit of being a good market nationally to provide that sort of ease of capital and the investment opportunities to others. And our NRIs are there, FIIs are there. I would say we need to look at that slightly on a global perspective.
Mr. Patel, thank you very much for talking to us.
Thank you.
That was Mr. Patel. And whenever you think of a stock market, the one picture which comes into your mind is the BSE building. And please remember who changed the face of BSE, Mr. Rajnikant Patel. Thank you very much for taking time out to watch this show. Namaskar.